Nice trades on the day. Want to highlight tick wave plus 3,500 per E-mini. Usually our biggest winner is in the NASDAQ. Today, the biggest winner per contract is on the S&P. So here are our results on the day. We'll go over the rest of the trades in the market in a minute. 200K portfolio. The hypotheticals were 72, 42, 50. The live results were right at 7,000. And these are not the final numbers. The final numbers are on the statements, but these are close. And we had a little more slippage than I thought, so I'll go back and look at those trades, but fairly close. We had some other days this week where we did better than the hypotheticals on the E-minis. The micros, not as much, but 50K portfolio, 3 micros, 21.75, 21.72.75 for the hypotheticals live, about 2,050. And based on the E-minis, and the live results were just around break even on the month, about 0.4%. I consider that break even. And up on the week about 1%, which is kind of around break even. So we've been transitioning back into portfolios and updating and looking for better ways to trade. And so these are the results that we're looking at right now. Big trading day today, good victory. Going into the weekend, Fridays still tend to be great. And lately it seems like if you just traded on Fridays, you would be ahead than if you just traded Monday through Thursday as well. But I don't anticipate that pattern will always be the case. And so let's look at the trades. The other trades on the S&P. Cobra 3 captured a piece of the trend, plus 575 per E-mini. And then Tick Fader, it lost 625 trying to short this. It's a counter trend strategy. And so it's been off a little bit. The market is wide ranging. The market did what we thought it would do. Before we go over the NASDAQ trades, I want to go over this. This is the NASDAQ earnings yesterday, and Apple beat Amazon, and Meta brought the NASDAQ down pretty sharply. And yesterday's video or description, we talked about how I anticipate this reversal rally to happen, because that's what happened on CPI. It just reminded me of CPI, and I'm glad that the market didn't open up here or up here. It did open up around 11,200 for the day session, so 300 points off this low, and then it chopped around. And then I thought it would be an outside day that would take out the lows, took out the lows of the week on Thursday, and then I thought it would take out the highs of the week today. So I thought there would be a bigger move to take out these highs, but we may see that gap up on Sunday night. The fundamentals to me are still bearish, but the liquidity just wants to buy here. It's trained to buy here. There's trillions on the sidelines, and so they'll tend to buy these markets that are still probably overbought. The earnings will come down, and if you talk about the price to earnings, they talk about that all the time, and valuations, and they say they're around fair value, I guess 15 or 16. But if these earnings come down, then the prices will have to come down to get this back to fair value. And so, but it's a longer term back and forth ebb and flow, and so it's hard to short this market. We're glad to trade it either way. We're flat at the end of the day. We rode the bullish trade today, and we are flat as we go into the weekend, so we don't have to be worried about the risk. It's interesting to hear the talk about where the market's going to go. If you zoom out, one thing also is that Monday's close was right here, and so you see most of the week seems to want to return to Monday's close. It's right. Let me pull the pen out so you can see what I'm talking about. Monday's close is right here. And so the market spent a lot of time coming back to this earlier in the week, and then it diverged, and then it came back, and it's chopped around here on Monday's close, and then it kind of extended. And so last week it kind of did the same thing, and then Friday it rallied. So it diverged a little bit from the early week's closes by rallying, and I thought we might get that same magnitude of rally on Friday. Let's zoom out though and look at this. Everyone's talking about trying to determine each day whether it's the new bull market or the new bear market. It hasn't really gone anywhere. We also have the midterm elections coming up, and so maybe there's not a lot of major institutional allocations going on until that happens. So you just see these. Here's the CPI that I'm talking about. The market went down. CPI, just a flash move. And right here, same thing, flash move. I saw that coming. I did think it would go to here and break out of here. So I do anticipate maybe a gap up on Sunday night or Monday, though. So we're not taking that trade, though, and we are flat at the end of the day. Let's go over the NASDAQ strategies. Going over the NASDAQ strategy, we were 2 for 3 on the S&P. A lot of these strategies that lost had tight stop losses. So AT 2022 minus 825 per E-mini. These are all 2 E-minis. Viper 2021 plus 3,900 per 2 E-minis, or about 1950 per E-mini. Tick count trend, I don't know why some of these don't show on the right, plus 3450 or 1725 per E-mini. These are the hypotheticals. This daily P&L plots the hypotheticals at the bottom. Tick reversal had 2 trades. It was plus 45.60. So that was up about 20, almost 2,300, 2280, I guess. And then tick wave. This is minus 825. Took the same trade as the S&P strategy. Just stopped out. We needed another 26 points. It traded. It's frustrating when you get stopped out on the same bar. That was another $520 lower move, so we needed about a $1,400 stop loss instead of an $800 stop loss. And so we may have to adjust some of these, but I do like having these tight stops. AT 2022 is an example of a strategy with tight stops, and it just had an equity peak on the last trade. So for example, the last trade was here, and you can see how it had an equity peak. You can't even see today's loss unless you zoom in. That's how much, that's how small today's loss is on the equity curve. And so when you're trading these and looking at these, realize that $1,000 it can be a small move on an equity curve. And so this is actually 2 E-minis. So if you trade 2 E-minis, this is AT 2022. It has a tight stop loss. Let's look at that again. I want to make a point on this because a lot of this. You're only right 42% of the time. So on an equity curve that looks like this, you're wrong over half the time because you have a tight stop loss. You're cutting your losses, letting your winners run. And so same thing on tick pulse. It needed another 10 points here. I already calculated that 10 points lower on the on pretty much the very bar, the next bar actually. It was stopped at 11,494. Market traded on the very next 1 minute to 11,484, 10 more points. And so 30-point stop loss is pretty tight, just caught in the noise in a narrow range, really. But these does have a good equity curve longer term, and so has a huge potential, but lately it's been just stopped out. And so 3 for 3 on Viper, 3 for 3 on tick count trend, 2 for 2 on tick reversal, and then 0 for 1 on these. So strategy-wise, we are 3 for 6. Trade-wise, we are 8 out of 11 on the NASDAQ today. And on the S&P, we are 2 for 3 strategy-wise and trade-wise, since each of these only took 1 trade on the day. Let's look at the results again for the weekend. So this is Friday's trade. Good to end up on the week and to be back up on the month after all the transition that we've been through. So those are the trades again, once again on the day for Friday, October the 28th, 2022. Monday is the last trading day of the month, and then FOMC is on Tuesday. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.